Hello guys, welcome to Technical Insights episode 15. So guys, we're flying through these episodes. We only started this year to provide you guys with these technical insights on YouTube. Hope you guys are really enjoying them. I can tell you personally guys, I love sharing as much as possible with you guys. So episode 15, here we are. It's James, as I'm sure you guys know. And I've got these markets here, 5 markets to run over and share my insight into my technicals with you, share with you what I'm actually looking for in the market as we go into the week ahead. Now, guys, I've had so many messages from so many of you guys expressing your thanks, expressing that how much money you're making, what percentage you're making just from these analysis, sharing our analysis with you. So it really is a great honor. It's a great pleasure to be able to obviously do that for you. But remember, guys, always stick to your risk management when trading. Any trader can be wrong. Okay, people are wrong. Everyone's going to be wrong at a time, and I'm going to be wrong at times. Okay, so just bear in mind, obviously, if you are taking trades from the analysis, that you always do stick to your risk management. Okay, because these aren't signals. It's just purely and simply my view of the market. Okay, so as I mentioned, guys, I've got US dollar index, I've got gold, I've got euro, Japan yen, GB pound USD, GB pound CAD to share with you. Going to keep it as simple as possible, as I always try and do. And in these videos, what we do is we forecast what I'm looking at to potentially happen for the week ahead. Okay, so just taking a look here, guys, we're on the US dollar index. Just remove all drawing tools. We're currently here, guys. As you can see, we're on the weekly time frame. What we can see is just through this level here, guys, just around 125, this region. You can see previous resistance here, and it was also previous resistance if we went further back. But we've got previous resistance here. We've also got previous resistance here, rejections from this point. And price here on the weekly time frame has formed what? It's formed some indecision. Okay, so previous week was bearish, so we expected some further continuation of some bearish movement, which is what we did see going into this week, but we have just formed this indecisive candle. Now, from indecisive candles, guys, the market can go either way. We could end up pushing to the upside, we could end up pushing to the downside. It's always important to take into account both potential moves that can happen in the market, because we want to be prepared if the market's going to do either. Okay, we want to be prepared. Some people say you should only have one bias. Personally, we always need to forecast both potentials that can possibly play out in the market. There can be a few potentials that can play out, which is why that is what I do, and I forecast what I can see happening. Going into the daily time frame then, guys, what can we see? We can obviously see previous lower high point here, market pushed to the downside, formed a lower low last week, obviously pushing past this previous area of a low. So we got a new lower low, and we've not obviously voided the previous lower high. So we can therefore see that overall, guys, we are still in a bearish territory at the moment, although we have stalled at this region of 125. Okay, so just bringing back the drawing tools, we can obviously see this highlighted zone here, guys, at 125, and it's going to be a key area to obviously watch out for as we go into the new week. Okay, because obviously we're always looking at the lows and the most recent highs for where price is currently trading in. So as we now take this into the 4-hour time frame, okay, taking this into the 4-hour time frame here, let's just take a look, just see how this sort of trend line works here. Okay, trend lines for me, guys, are only a guide of price. Okay, I've mentioned this in other videos, why I don't really favor trend lines. Also, I mention it to the technical effects students and members very often, why I don't favor trend lines, because a lot of people would have bought here on the break retest, but to me, this market here, guys, hasn't really shown the confirmation of further upside movement just yet. Okay, so what we can pretty much see here from price action on the current time frame, okay, the 4-hour time frame, what we can currently see, previously, guys, the market was obviously flowing in a nice descending direction. You can see this here, guys, by the lower highs and lower lows that the market was forming. We formed this low down here where we then saw the morning star formation. We saw some indecision, then the morning star formation took price to the upside. Okay, so this is obviously given price a push into this region just here. Now, overall, guys, to me, the market here on the 4-hour time frame is still bearish. But immediately, when I open this market, what do I see? okay, I immediately see that the market is pretty much just moving sideways, okay? Let's just copy that. Okay, I can pretty much see, guys, straight away that the market in this region here is just moving sideways. So as soon as I see that, just take a look at the difference between looking left, trending market, to what we're seeing here in these 4-hour candles, okay? We can actually see that the market has been in this range now for the past 3 days, 2.5 days. Okay, so that's quite a substantial range that we are obviously currently seeing price in. So what we really need to do, guys, is just be patient. Okay, we need to be patient. We need to let the market do what it's going to do and show us what it's going to do next. We could see the market break obviously out to the upside, where obviously then we would be seeing what? We'd be seeing US dollar strength. Now, if we see US dollar strength, guys, this highlights to us the potential downside movement in Euro USD, GB Pound USD, etc. Okay, if we see upside movement in the US dollar index, we would also more likely see downside movement in gold. Okay, so that's all to do with correlation. So do take a look into that if you don't quite understand it. So as you can see, I've clearly just highlighted, guys, that we're in a range. So what we're going to now do, guys, is we're now just going to forecast and see where the market could potentially head to next. We know overall, guys, that we obviously had this bearish move here. We can see that the 38.2 retracement area has been voided. So let's just remove that because it's already been void. Okay, we don't obviously want to clutter our charts. We can see here, guys, that the market currently has shown a push into the 50% retracement area. Okay, some people get a bit funny when I don't make sure it's exactly on the line, but guys, I'm doing a video. Okay, so I want to make sure I get as much information in as possible. So we can see here, guys, that obviously we've tapped into the 50% area. Now, if we see the market obviously break out of this range to the downside, it highlights potential further continuation. Now, overall, to really give us that overall confirmation, we must see a break of this low, because a break of this low will show us a break of the daily low. Okay, this daily low just down here, which is what we want to be seen broken and see cleared to really show us the potential of further downside movement. So first of all, if we see the market break out of this range, I'll be looking for the market to first of all come into this region. Why? Because we could end up with what? We could end up with a double bottom. If we then break through this region, that then highlights to me further weakness to the downside. Okay, so that therefore means potential further weakness to the downside. If we break out of this to the upside, okay, if we reject off of this support area and we break out of this to the upside, then we could, of course, eventually come into what? The 61.8, the 78.6, or we could eventually clear the 127 point, which would be the daily most recent lower high. Okay, remember that. Daily most recent lower high is just here at the moment. Okay, so if we did void our Fibonacci, then of course we can look for further long-term movement. But we take one step at a time. Okay, one step at a time. Okay, we don't want to be predicting too far ahead. So we take one step at a time. We break the 50%, we look at the 61.8, then the 78.6, then we look at the potential of a double top. If the double top doesn't play out, we see that broken, we can then confirm what? We can confirm further long-term upside movement. It's very important, guys. Just take one step at a time. Okay, you don't want to be trying to be the person that's just called the craziest moves. You don't need to be. Okay, you don't need to be that person. Just take one step at a time. So pretty much, guys, what we have here in the US dollar index is we pretty much have price in a range. Okay, we're going to wait for price to break out of this range, and then we're going to take it one step at a time, which I just highlighted to you. Okay, so what we could do is we could just add on this low just to give us the confirmation, so we know if this area here of 12450 is broken to the downside, we can look for further downside movement. Okay, why do I remove the Fibonacci? Guys, I just like to keep it clean. Okay, I just like to keep it clean. It doesn't take me long just to do this once again. Okay, so I like to keep it clean, like to keep it simple. Now, going into gold, guys, I previously did an IG live, guys, and when I mentioned on the IG live, price had tapped into this region just here of 1745, and I mentioned the potential of a reversal. A lot of people told me that I was crazy because I was looking at reversal from here. By reversal, guys, I didn't mean a complete trend change. Okay, we could end up with a complete trend change, but I'm not saying that we are going to just from tapping into this region here. But we did see the retracement that I was looking for. Why have we seen the retracement? Because the market, guys, was overextended. Okay, when the market is overextended, what happens in the market? It needs to release. Okay, overextended, we needed to release, we released. Okay, overextended again, we need to release, and what are we doing? We're currently releasing. Okay, and it happens in the market, and it's just the market flow. So once the market tapped into my key area here of 1745 and showed some indecision,